It's tax season, and I was looking at everything this week, and I actually came across my tax returns from my first year here on YouTube. And I noticed something that changed how I look at business taxes now, and something that's literally saving me thousands of dollars every year. This is one of those out in the open kind of secrets, but honestly, I did a little research, and 3 out of 4 business owners don't do this one thing. And of course, they end up overpaying tens of thousands of dollars in taxes every year. I know this because I was one of them that first year on YouTube. And when you're in the know, the IRS actually expects you to do this. So yeah, about 3 years ago, I was celebrating my first real YouTube money, and it was about $18,000 that first year. Of course, it wasn't life-changing money, but it felt amazing until tax season hit. And it wasn't just the tax bill that shocked me. It was just realizing how many other business decisions I was making that were wrong. This was at a time when I was reinvesting in better equipment, lighting. I was hiring my first editor. But my business structure, the way I was set up, was costing me thousands in taxes, and I didn't even realize it. I remember I was sitting here at my desk, and I was on the phone with my accountant, Jeff. And that's when I first learned about something called self-employment tax. I'm guessing a lot of you already know what it is, but it's a 15.3% tax covering both the employer and the employee portions of things like Social Security and Medicare. Here's the part I didn't think about. All of that is on top of regular income tax. I remember Jeff saying to me, "Welcome to being a business owner." But here's what you need to know. He's a good guy. He's always helping me out. And he told me that I had been doing business as a sole proprietor. And he described that like trying to build this really big house on a small, shaky foundation. So his solution was to fix this moving forward. And he said I could restructure as something called an S Corp. Now that would do a ton of different things, and we're gonna talk about all those in a minute. But fast forward 6 months or so, and the YouTube channel is actually doing great. It's on track to do like double, close to $36,000 in revenue. I was working harder, creating more and more content. But of course, that meant that more money was gonna be going to taxes too. But because Jeff and I made that switch to an S Corp at the start of the new year, I called him up in June and I was like, "Hey, we need to have a meeting. I just want to see how things are looking for my business so far this year." I didn't want to get hit with like any surprise taxes again. So we're at his office, and again, he's stressing the benefits of this S Corp strategy, and he starts talking about things that I'd never heard of and really nobody talks about. So of course, many of you know, you start by just setting up your business, like let's say setting it up as an LLC. But really, all that really means is that you sort of register with your state as a business. Now, for some people, that's a hurdle in itself, but honestly, after you set up the LLC, if you're interested in becoming an S Corp, you really just sort of like elect to do that with one simple form. But honestly, that's just the beginning, because the real magic comes from when you pay yourself. Now, the easiest way to explain this with an S Corp is that you sort of split your income into 2 different buckets. The first bucket is what the government refers to as a reasonable salary. And that's where, yes, you pay yourself a salary and you still pay that self-employment tax, but it's only on the amount that's coming into that paycheck. And that paycheck comes from an actual payroll company. And that got me like a little like scared at first, but it's nothing to be afraid of. It's super easy. You just sign up online and you sort of set it and forget it. But then there's that second bucket, and that's the rest of the money you earn above and beyond that salary. And that sort of fills that second bucket up with something called distributions. And this is the really cool part, because all of the distributions completely avoid that self-employment tax. At first, I thought this couldn't be true, it can't be legal, but not only is it true and legal, but the IRS expects it, and so long as you're doing it right, then everything's okay. And this isn't just for new businesses, like this is something new. I talked to a guy making 7 figures who's been using this strategy for years. He basically told me this is the foundation of being a smart business owner. Now, I'm like a show and tell kind of guy, so let me show you exactly how this works with real numbers, and I'm just going to use like easy numbers. Let's just say your business makes $100,000 in profit as a regular LLC sole proprietor. That means you're going to pay $15,300 in self-employment tax alone. Now, let's see what happens with the S Corp structure. If you pay yourself that reasonable salary, let's say it's $36,000 a year, then you pay just $5,508 in self-employment tax. And then the remaining amount of your profit, that $64,000, that comes to you in distributions with zero self-employment tax. So that right there is about $10,000 in tax savings just that year. And then of course, as your business grows and the profits do too, so do your savings. Now, going back to my meeting with my accountant, Jeff, of course, I was so glad and happy that we set this up for this media business. And I tell him all the time, thank you, you're so smart, all that. And then at the next meeting we had, he smiles and says, you know what, now it's time to talk about supercharging those retirement accounts of yours. And I'm just thinking to myself, okay, yep, there's more than just tax savings to this, huh? And he starts talking about how the S Corp structure is perfect for maximizing retirement savings too, through something called a solo 401k. Now, I still have not made a video about the solo 401k yet on this channel. So leave me one of those bag of money emojis in the comments if that's something you want to see. Now, of course, having your LLC set up is a great first step, but having that S Corp in place really helps separate and keep separated the personal from the business. We're talking about your personal savings accounts, your personal home, your retirement fund. I mean, all of this is something to think about. Let me make this simple. S Corps are perfect for small to medium businesses with consistent profits. Think $50,000 or more annually. I've seen this work for all kinds of business, content creators like me, local retailers, startup founders. The tax savings almost always outweigh the costs of setting it up and paying for payroll every single year. And for those of you who are out there already making six figures, you're not set up like this, you're leaving so much money on the table. So all you really need to do is, number one, check to see if an S Corp makes sense based on your profits. Then file that one form and check with your state too, of course. And then set up payroll the right way. That's that last crucial step. Really, the key to making all this work smoothly truly is the right payroll system. So I'm gonna leave a link down below in the description if you think an S Corp is right for you, and I'll help you get on the right path to a great payroll provider. Looking back at those early YouTube days for me, I'd wish I'd known all of this sooner. But what matters now is that I know it and you know it too. So again, check out that link in the description. And if you have questions about S Corps, then just drop them in the comments. I might honestly use your question or your story in a future video. Just keep in mind too, most business owners, it seems like they never discover these strategies. And if they do, they discover them too late. Now you know them, and the time to act is now.